Hey guys, welcome back. Tim Knox here in the studio with my friend Michael Zuber from California. California?
Sure, why not?
Whatever. When you're from Alabama, I'm from a state that uses only like three letters, but it's repetitive. So it's real Alabama, Mississippi. You know, I'm not profiling the South, but it is what it is. But anyway, wanted to get back online. You and I did a video last week. We actually did a couple of videos. We did one on your book and on the rental market, and then we did another one on the effects of this coronavirus. And here we are a week later, and things are changing by the minute. So thought we should jump back on, especially because you are my resident expert in all things financial. And so, I may be in trouble here, but
Yeah, exactly. That's a small list, man.
so let's start out. Let's talk about this Fed rate cuts. The Fed has cut the rate to, I think it's 0 to 0.25 points. My clients, I'm a realtor, so I started getting these phone calls from clients going, well, is my mortgage going to be 0% now? And of course, I called my resident mortgage expert, and he explained that not really how it works. But you follow this stuff far better than I do. So let's start with the Fed rate cut. What do you think?
Yeah, so I think when we talk Fed rate cut this time, and actually the last two times, we actually need to start with the fact they did it on an emergency basis,
Mm-hmm.
right? Historically speaking, when the Fed has made adjustments, either up or down, they have done it at the Fed meetings, right? Which happens, I think it's like 10 times a year.
Mm-hmm.
Um, that is historically where all the smart people get in a room, they look at the data, all these different factors, and they go, hey, should we raise the federal funds rate up or down?
And
Right.
based on what criteria do they raise up or down?
Well, basically, I mean, if you believe what is put out in the media and over time, they really have two kind of mandates that they are trying to thread the needle on, which are really, really hard. So they have a tough job to do. One is inflation,
Mm-hmm.
right? Historically speaking, they've often talked about getting inflation to about 2%, which they consider to be healthy, but also safe, right? You don't want inflation running too hot, or you don't want inflation running too low. So historically speaking, they've talked about 2%. Now we can all argue about what's in the 2%, and is CPI really a calculation of true inflation that you and I pay because it doesn't include this, it doesn't include that. Those are conversations for another time because they don't help understand what's going on.
Mm-hmm.
So first off, the emergency rate cut sends a signal. And I've been watching this for 30 years, and I do not recall a time, including the financial crisis, where they did two emergency rate cuts in 10 days.
Right.
Right? They cut a half, and then 10 days later, they did not wait 3 more days until their scheduled meeting on this Wednesday. They cut on Sunday. So the fact that they were emergency rate cuts is a signal. And the fact that there were two was a big signal because something was broken in the financial system. It's probably somewhere in the commercial market, meaning the commercial paper market. Something was not liquid, and they needed to get ahead of this. I mean, there has been talk already, historically speaking, that if they didn't do that and interject $700 million plus 1.5 trillion the week before into various parts of the sector, we could have had bank runs, and the banks may not have opened, right? So it was bad.
Mm-hmm.
So again, what does it mean? The federal rate cut, something's broken. So that's the first thing. Second, we got to talk about the size. Historically speaking, most meetings, it's a quarter up or a quarter down because the Fed wants to tinker, right? It wants to play at the edges. It wants to go, ooh, getting a little hot. Let's raise a quarter. Ooh, getting a little cool. Let's lower a quarter. That's where they're comfortable. They do not like moving by 50 basis points, which is what they did 10, 11, 12 days ago.
Mm-hmm.
They've done that a couple of times. They did that twice that I recall, maybe 3 times during the financial crisis. They've done it once before that, I believe, around 9/11. But historically speaking, a half is not something they enjoy doing. I have never seen a full point, and I've never seen 1.5 points in 10 days. This is abnormal times. You got to think about that, right? So if this is abnormal times, and we all talk about the Great Recession, and you and I are in real estate, which was a real estate depression,
Mm-hmm.
it should wake us up, right? So some stuff's really, really broken, folks. That's what I take from it.
Yeah.
Now so that's, emergency, big. Now, what does the rate cut mean? For you and I in the short term, it doesn't mean a lot. The rate cut now is basically lets banks get more liquid. It has available cash. Um, I suspect it will mean something to us in a few weeks or months when the economy starts sputtering back together. The economy is in full crash mode right now. Um, as for the question that I get almost hourly these days, are my interest rates on my mortgage going to go to zero or sub one? The simple answer is no, right?
Mhm.
Banks have fixed costs that they must pay back or absorb in your mortgages. So is it possible on an owner occupant property to get something maybe with a 2 on it? Absolutely. Uh, could I imagine super rare cases with a 1? I guess I could imagine it, but it won't be for you and I, right? It will be for the person that's got, that doesn't need the loan, right?
Mhm.
That, like, it's a person that could pay cash, right? Think, Tim Cook from Apple or whatever, right? Think somebody uber wealthy. So I'm guessing there may be some owner occupants with 2s. I would be happy with anything on a 3, and of course, I only talk 30-year fixed rate mortgages. When you talk investor loans, which are the people I deal with all the time, 30-year fixed rate loans on investment property needing 20% down. If you get anything with a low 3, take it and run.
Right.
I cannot imagine any of these with 2s on them. It's not, at least not in the short term. They could absolutely create incentives later in the year when they try to goose the system. But today, take a low 3 and run. If you're looking at commercial, meaning 5 and above, you're going to be probably, man, you're going to probably be in the low 4s for most of that stuff. So
Yeah.
it's fun to think about. Fed rate's down at 0. My mortgage rate's going to go to 0. It's not quite how it works. Just not how it works.
Yeah. Let's go back to why the Fed does what it does.
Sure.
Typically, the Fed will either cut or raise rates based on what's happening in the world, based on what's happening in the country. It's really to stimulate the economy one way or another. And so
Right.
that rate,
Destimulate or stimulate.
right.
Yeah.
So that rate is really that is the rate that, and correct me if I'm wrong, that financial institutions pay the Fed for loaning them money. And then they, in theory, will adjust their interest rate for what they do for like consumer debt, credit cards, car loans, that sort of thing. So the Fed rate cut is not a direct to consumer rate cut.
Correct.
It is
it has nothing to do with it.
Because I think a lot of people are thinking that, okay, that's now going to be my rate. I'm going to go buy a new car at 0%. I'm going to go buy, which you can now.
Yeah, I'm sure.
But so the question that I asked though is they cut the rates. When they cut the rates, I think the thinking is the American public will start spending more money because of the lower rate, and that money goes back into the economy and things flourish. The only issue I see now is if they're cutting the rate so people will spend money, well, you got to have a place to spend that money.
Yeah.
You know what I mean? And if everything is closing, I mean, is this more of a play just to keep the stock market in check at this point?
No, I mean that's so a couple of things. So you said 2 things there I want to talk about. Historically speaking, in normal times, yes, the Federal Reserve will be lowering rates to goose commerce, right? We are a consumer-based economy, and we are a debt-based consumer-based economy. So historically speaking, that is the one thing that they can tweak that allows banks to tweak theirs. And oh, by the way, more stuff happens. Notice I said normal times. We are not anywhere close to normal times. When Warren Buffett, who's 89, comes out and says, "Hey, if you live long enough, you see everything once," and he's like, "This is once." That should tell you this is not normal times, right? That gentleman has been around for a long time, seen
He's like
everything.
175. He's Methuselah.
Yeah, it's just nuts. So I mean, you need to pay attention to that, right? This is non-normal times. But no, I don't think Powell, who is the Fed chair, gives a rat's tail about what the stock market is.
Okay.
I think it's something that affects all of us, the people. But I think Powell is an intellectual. He's a former trader, so I don't think he's worried about the stock price today. He is worried about the American economy, and I think he saw the commercial paper market about to seize up because there were such dislocations. When you trade anything, there's an ask price and a buy price, and historically speaking, and why we can trade stocks in a millisecond is because there's always a buyer and a seller, and the value is known, right? Because it's
Right.
there. It's one of the reasons I love real estate, because it's illiquid. It just doesn't work that way. But stocks, bonds, derivatives, they all trade instantaneously. And what they were seeing is dislocations. If you can go back and look at your numbers, the 10-year note, or the 10-year note was under 0.5%, just like 7 or 8 days ago. These were all signs that people were chasing liquidity and stuff was just not working. So Powell took rates to zero. He put $700 million into Operation Twist, or whatever he's going to call it this time, because they don't want to call it quantitative easing, but it absolutely is quantitative easing. And he's trying to shore up the system so it doesn't break. I don't. Yeah, he did not. He did not do what he did Sunday for the stock market, as Monday showed. Right, we were down 3,000 points in the Dow. He knew that was coming. You don't do an emergency move on Sunday night because you're trying to protect the stock market. You're trying to protect something else that the average American is not going to see. And he did the right thing. In general, people like to pick on the Fed, and they think this is some mysterious organization and they can just print money and all these horrible things. If he hadn't done that and put that money in, I'm fairly convinced that the stock market would be closed, because they would have claimed, oh, the virus, we can't get people here, blah blah blah, we're going to close for 2 weeks, and that would have been horrible. Right? We have to have some confidence in this economy, and to take that away would have been terrible.
Yeah, and just to clarify a point, the Fed, although it is a federal entity, it is supposedly not governed or fed by politics. Because it seems like Trump is always independent. Trump is always bad mouthing the Fed until they do something that he wanted them to do. Then he takes credit for it. But you know what I mean? So they're supposed to make decisions not based on who's in office and political, but more the economy and keeping that strong.
Yeah, they are absolutely supposed to be an independent entity. We live in a world of constant news and bombardment. It's probably been true all the way back since Bernanke and Yellen. These are Fed chairs that I'm familiar with. I don't think Powell cares. I don't think he is. I'm going to give Powell the credit of the doubt and say that he was not intimidated or put off by a bully picking on him.
Yeah.
I also think, in fairness, I think the powers that be at the top are told what's coming. Then he sends off tweets so he can take credit for it later, right?
Yeah. Well, it's politics. Let's talk a little bit about really quickly in the time we have left.
Sure.
The effects of not only this rate cut, but the coronavirus at large, because we are seeing something happen that's never happened before in this country. I mean, not since when the Spanish flu hit after World War I. That killed more soldiers in 2 weeks than the war did the entire time. But in modern times, this is a new thing. You know what I mean? This is a new thing that people don't really know how to react to, and there are going to be repercussions. Businesses are shutting down, meaning that they are not generating revenue, meaning that they are not supporting their employees. So this thing is going to trickle down on a personal level really quickly, and I think we're seeing that on a national scale.
Every American, and I'll go as far as to say, 98% of the world, but certainly every American is going to feel this over the next couple of months. You're either going to feel it because someone in your personal network that got sick. My hope is they get better. It is that contagious and innocuous, and all these people that are calling it just this or just that, or I'll just call them stupid or ill-informed. Ill-informed. How about that? Ill-informed. Let's be more politically correct. But
God forbid you offend stupid people.
Yeah, exactly. Yeah. Well, they can leave comments too.
They're very opinionated.
Yeah, they can leave comments too. Yep. They may not be literate, but they can leave comments too. So it's going to impact everybody. I think there's a couple of things that I'm going to say I hope happen. I would have said are going to happen, but at this point, the freaking politicians are such donkeys. They're not getting along. First and foremost, I think the people, right? The citizens, the people that are losing their jobs or will go on furlough. I believe we are going to be seeing checks from the federal government to take care of monthly expenditures, food, water, shelter, right? These are things that are requirements. They're not going to be your normal paycheck. They're not going to be this or that, but they're going to be able to take care of food, water, and shelter because the federal government doesn't want to see people in the streets. They don't want to see looting. They don't want to see these kinds of things. So you stop that by sending people money, frankly.
Mm-hmm.
So
Right.
that's going to happen. To the citizens, I feel horrible for the people who have small businesses, right? The kind of 50 employees and less, 10 employees and less.
Mm-hmm.
Um, this is going to sound terrible, but if you're the federal government, this is what they're thinking. You're probably too small to care about, right? They're
Yeah.
not going to get to you.
Mm-hmm.
We are going to have mass closures, mass bankruptcies, mass, lots of stuff for small businesses in the next. I mean, it's going to start soon. Most of these people run on shoestrings. It's just the reality of life. Um, you know, I'm sorry. I mean, I feel terrible for you. Through no fault of your own. Um, this thing has come here and it's crushed your dreams.
Mm-hmm.
But the good news is about the American dream, the American economy, is you can start again. And I would tell you to start again, right? Let this baby go. Declare whatever you have to declare. Shut it down. And get ready to do it again. And take all the lessons learned from this. Wash away all that bad debt and let's do it again. So I think there will be green shoots coming up. It is certainly going to hurt some people a lot. And then you go kind of 50 employees up to 500, kind of that small, big business. I suspect most of them will get small business loans and be given, if they can prove a strong balance sheet, that they'll be able to go through. And then the big businesses, 500 above, they're going to be fine. They're going to get whatever they want
Yeah.
because, that's just how I see it coming down.
Yeah. Well, I mean, and as a guy who's been in small business, most small business owners, I mean, literally, we verge on bankruptcy daily. You know what I mean?
Yeah, I know.
I had, and I think we talked about this back. We had a series of tornadoes come through here years ago, and basically hit a power grid, knocked out the lights from anywhere from a week to 2 weeks. Well, I had two retail stores, and we had no power, but I also had 45 employees. Oh yeah. And so we had no power, so we could not open the store. Everything was electronic, of course,
Of course.
and literally we never recovered from that. We were closed for 2 weeks, and just the drain. And most small businesses, I don't think, even have that reserve to keep paying employees. So I think that's going to be a big hit. And again, sadly that trickles down to the people who work there, who are not going to be getting those paychecks, and so there are going to be repercussions there. Let's talk about this from the real estate standpoint, because I have already been put on alert by title companies and preferred lenders that closings are probably going to slide because title work is going to take a little longer, funding is going to take a little longer. That's affecting things from my point of view. We're still selling houses and showing houses. We're not doing opens right now. But you have 150 some odd doors of rental property. How is this going to affect landlords?
So there's a couple of things, right? So I thought about this a lot. And again, if you go to my channel, One Rental at a Time, I put out a video yesterday called What If? What If Tenants Don't Pay, I think is the exact title. You should check that one out. But basically, so first off, let's talk about real numbers, right? So I've already had March collections of rent. We had 98%. We sent one person to eviction who just had to go to eviction. And we had 3 partial payments. So we expect those 3 to come in. And I think 2 have come in already. So in the pile that we had 1 eviction, which is normal, right? Kind of happens, 10 times a year. People lose jobs, get drug habits, whatever it is, lose roommates, who knows? So that's that. So March was normal for me. I am talking to my team up there daily to try to figure out what's going on. Fresno, again, is 2.5 hours away from me. They are currently not under shutdown. I am in Santa Clara County, and we went on lockdown at midnight. So we are told to stay in our house for 3 weeks. Now you can go to the grocery store, hospitals, those kinds of things, but we are the most restrictive county right now, and it already feels weird. So I fully expect all of California to be there shortly. So again, I expect a choppy rent collection in April. I've evaluated, as you'll see in that video, I get roughly 50% of my rent collection from sources that are not people. meaning Section 8 is the biggest example, but some is Social Security or other entities that will not be affected, right? That money's coming. Then there's, the other portion of that, which are partial or small payments. I expect to get most of that. But I did identify 25 high risk people, right? These are cash payers paying over $1,000 a month. And I'm like, ooh, could have a problem. So we've already been proactive. We evaluated all 25. I've figured 5 I'm okay losing if that's the way they go. The other 20 I will absolutely work out if it needs to be.
Yeah,
So,
your advice to folks that don't own the number of doors you have. For example, you and I both know a lot of folks that just own a few rentals. And
okay.
these are typically folks who themselves are working a full-time job to make ends meet and then got into the rental market. By the way, Murphy says hi.
Murphy.
Oh yeah, we got to go buy dog food, Murph. Hope there's not a line. But those folks, I mean, and again, the ones that probably have a full-time job, husband and wife decided to jump into rentals. They've got a handful. And if those rent checks miss, they may be in trouble.
Yeah. So I'll talk to those people, right? So what I would do if I had 4, 5, 10 rentals and I was doing self-management is I would proactively reach out to all my tenants now. When I was running sales teams, I had a saying that bad news doesn't get better with time. So be proactive. Be proactive. The other thing is stop all capital expenditures, right? We as landlords sometimes have things that we want to do to the property to make it better. Cancel all of those immediately. In the short term, repair versus replace. This is about conserving cash. This could be messy for 2 or 3 months, and you need to be ready for that. State of California, again, I think this is coming nationally. Just yesterday, by the governor, said no evictions and no foreclosures for the next 2 months till May 31st. And, he snuck in, we may extend it. I'm like, you son of a gun. I hate that guy.
Yeah.
But
you think that's going to motivate people to stop paying the rent?
Well,
which puts the onus on you to still make that. If the house had a mortgage on it, you still got to pay that.
Well, they got to stop foreclosures too.
Yeah.
Right. That's, so the banks can't take any, against you. So basically what I would tell somebody who had 4 rentals today is you need to talk to your tenants. You need to figure out what's going on. My guess is half of them are going to be in trouble. The other half have jobs that they'll work from home or whatever. Because again, even in Santa Clara County, my guess is 50 to 60% of the folks were already working from home. That's just that kind of community. So I would tell you to get ready. I would have the conversation so you could plan it out. I would take that information and tell your lender, right? If you had a 4-plex, right? Hey, 2 of my tenants are likely to miss. But here's the deal. I don't expect rent collection to be a problem long term.
No.
I would expect, again, people, what did I say earlier? I expect the federal government to send checks to people. And they're going to get water first. They're going to get food second. And third, they're going to get shelter. They don't want to live in their cars, right? Yes, they're going to hear no evictions, but eventually that will be removed. And if they have a big balance, they're going to get evicted. So,
and that's another question is if you can't make payments or you can't make your rent, the responsibility of paying that doesn't go away. It may be tacked on to the end. You're not giving people free rent over the course of this, and that's what people need to understand.
Yeah, even in California, the great blue state, socialist California, says this is not an obligation to, you still have the obligation to pay rent, just if you're impacted, whatever the language was. But he was very clear, which I was shocked because he's a socialist, saying that, you're still responsible. So.
Yeah. Good. Yeah. People need to remember that. So, all right, guys. I mean, it's going to be a really interesting couple of 3 months here, if not longer. Hopefully, I think now that Donald's on the job, I think things are going to move faster. I think the hardest part is keeping people separated, keeping them home. You know what I mean? The social distancing is, you got to, and I understand that people have to work. You and I are very fortunate. I can take a month off and nothing's going to change. But the majority of people, the 99% that need to be out there working, and the ones that they're working creates products, creates services. It's going to be a very interesting time. So, and there's no easy answer to any of it.
No easy answer. It's we got to get through this. I mean, I'm seeing this meme or whatever you guys call it these days. Our grandparents were asked to fight in World War II. We're being asked to sit on the couch. You know,
Yeah.
let's
Which
just put that in
nowadays is
context.
almost as great a sacrifice. I mean, let's be honest, in the
Yeah.
minds of a lot of people.
Yeah,
You
but
know, that lady
you
who
know,
got on TV and said it's up to the millennials to fix this, dude, we're screwed. I mean, come on.
yeah, well, yeah, gosh.
What are we going to do?
I'm going to have more faith that the American spirit will kick in and they will eventually figure it out. But
Well,
yeah,
I hope you're right. You're much more of an
thus
optimist
far, it
than I
doesn't
am.
look good. I'll tell you that.
Yeah, well, it's going to be, it sacrifices all the way around. So, hey, buddy, this has been great. You are the author of One Rental at a Time, my absolute very favorite book on the topic of getting started in the rental market.
Yeah,
If folks want
appreciate
to
it.
plug your book, plug your YouTube channel, which is one of my favorite channels, and
Thank you, buddy.
tell folks how they can get in touch with you.
Yeah, so if you want to read the book that's akin to Rich Dad Poor Dad, that takes the mindset shift and actually shows you how it's done,
It's
you
better.
need to either go
It's
to
better.
Amazon right now and buy the book One Rental at a Time, or if you like to listen to books, it is finally now available on Audible, and it's shooting up the ranks. It's done over 300 copies just in the first 10 or 11 days, so
Awesome.
clearly of value. So go check out One Rental at a Time. If you're sitting at home and you want to talk about and understand what's going on in the financial news, I do original daily content on my YouTube channel called One Rental at a Time. And as I mentioned earlier, I'm on lockdown. So I'm putting out all kinds of videos these days just because I need something to do or go stir crazy. So, let's have some fun together. And thanks for the time.
And you can rock a hat like no one I've ever seen there, Goober.
It's the Warriors hat.
All right, good deal. Hey, buddy, let's do this again as things change.
You got it, brother.
All right, man. Talk to you soon. Bye.
Mhm.